Now, I would like to invite somebody who's got a very, very tough job of making things simple. This is something which even government likes to complicate in terms of Companies Act and corporate social responsibility. And Girish, all the best. Gentlemen, please welcome Mr. Girish Koliote. He's a commerce graduate, he's a LLB and a company secretary with having a prolific career spanning over 27 years. He is presently the company secretary at HDFC Limited, and his responsibilities include corporate, secretarial, and investor services functions. Prior to HDFC, he was the company secretarial for Fiat India Limited and various other MNCs. Please welcome Mr. Girish Koliote.
Hello. Someone mentioned about the new swan song in corporate India that Achhe Din Aayenge. But when I look at the laws, the evolution of laws in the last 2 years, I'm very skeptical as to the challenges that the businessmen will face in this country. When Vikas, I know Vikas since our days, and he was in HDFC Bank and I was in HDFC. When he mentioned that I want you to come over and address the printing industry. One of the first things that came to my mind under the Companies Act is that the Companies Act, which is a new enactment, it has come after about 60 years. Many of the eminent personalities in corporate India and law firms have worked with the government to create the statute. One of the first things that came to my mind for your industry, as far as my opinion is concerned, is that a lot of disclosures that are going to happen. So companies, whether they're private or whether they're public, will be required to make a lot of disclosures. So the balance sheet size is going to increase by almost 40 to 50%. So there is a business opportunity. At the same time, in the garb of Green Initiative, the government is also trying to promote disclosures by companies to its stakeholders and shareholders through electronic media. So I think the next 5 to 10 years, we will witness a change in the manner in which companies will address their issues and communicate with their stakeholders. And the print media has a very important role to play because we in SDFC, we believe in transparency. Yes Bank is one of the top institutions in this country, and India has a lot of expectations from Yes Bank. So how such companies communicate with its stakeholders will be one of the key things that will define India as a compliance-centric country. And the role of your industry is very, very eminent, because it's just not enough that you get a business from a company for printing its annual report or for brochures, but I feel that those print magnates who are able to understand the law, their requirement as to why a company is disclosing a particular item as per the provisions, would go a long way in establishing a business. So my presentation is, my humble request to you is just assume that you are a company, or you are likely, or you would wish to convert yourself into a company at some point of time. I must say that the provisions of the Companies Act is very draconian in nature. I think so it is basically a misleading by the government that they're penalizing the majority for the misdeeds of a minority. In fact, the saddest part is that one of the Companies Act amendment, the new act would have been an opportunity for the government to build institutions, but it is probably killing it. Institution of Chartered Accountants of India, which is one of the strategic institutions that we have, has been undermined. And believe it or not, I as a company secretary, we are working with the government, we are working with the Institute of Chartered Accountants to convince the government that it is wrong to be relying upon the bureaucrats to decide as to what the standards should be. Because I think the Institute of Chartered Accountants, under their leadership for the last 7 decades or so, has proved their capability beyond doubt. So now the presentation that I'll take to is, ma'am, can I request you for the next slide? This act is a replacement of the 1956 legislation. So it's been more than 6 decades that we're getting a new law. I believe there was a draft which came about in 99, and then 2003, 2009, 2011, and finally in 2013, the government woke up and simply notified the new enactment. Now the objective, what we were told in the earlier years, was that we would like to reduce it, we would like to make it concise, we'll try and make it as easy. Because basically a corporate law should be to facilitate administration of a corporate entity. So you have a private firm, you have an HUF, and you have a company. So that should be the intention for any country that wishes to be amongst the League of Nations. But here is a legislation that is so draconic that every aspect of law, whether it is in the domain of SEBI or whether it is insider trading, whether it is fraud, everything is sought to be regulated. So there are huge challenges. Now, when I was talking to Vikas, he also mentioned that most of your companies are in the bandwidth of 50 crores to 100 crores. So if India has to grow 7-8%, I think so you all will also breach the limit of 200 to 500 crores. So my humble request to you is that whilst you're growing with institutions such as Yes Bank, and whilst you partner with your chartered accountants and lawyers, you need to also devote some time to Companies Act. It is not a huge investment in terms of time and space, but it helps for you as business leaders of tomorrow to have one eye on the Companies Act, because unnecessarily you will open up regulatory issue with the Ministry of Corporate Affairs. They are as troublesome as the Income Tax Department, believe me. Next slide, please. Now, formation of company. Now, this slide deals with formation of a company. So if you're a public limited company, now you need 7 individuals to subscribe to the memorandum. If you're private, you need 2. And there's this new concept of one-person company that has been introduced by the government, where one person can be the member and the director. But all that he needs to do is that he needs to notify as to who his survivor would be. If something happens to him, there has to be continuity of the business. So in the memorandum, the name of that person who would step into his shoes as a member and a director needs to be mentioned. Now, as far as the memorandum and articles of association is the constitutional document of a company. Now, the biggest change that has happened is earlier you had, those of who have companies, you have 3 parts. You had the main objects, you had other objects, and objects which are ancillary. Now, the government feels it is not necessary for companies to have diverse objects, because my company was incorporated way back in 77 in the height of emergency. And we have other objects, that is Part C, which can even, we can get into agriculture. Now, why would SDFC get into agriculture? So now it's very important for you, because Mr. Majithia mentioned that, there are options available to you to diversify into other business. So your main objects would focus on printing and advertising, and then there would be other objects which should be germane to your main object. So you can't be saying that I'm in printing, but I would like to get into, real estate or into agriculture. So it is kind of restrictive. I thought the government would look at a very holistic approach, but it's very restrictive in nature. The articles of association has not changed much, but there is this concept called entrenchment, which says that there are certain provisions which a company can adopt, which is much more stringent than what is available. I don't see companies likely to adopt that, because who would want to work in a restrictive environment? Next slide. Now, what are the means of finance that are available? I mean, today you all are lucky to be partnering with Yes Bank. I mean, Yes Bank recognizes you as partner in their progress. Now, the Companies Act, instead of being very liberal as far as raising of capital is concerned, they have kind of put a lot of restrictions. In fact, in my humble opinion, they have stepped on the toes of SEBI, because SEBI is the one who should be dealing with raising of capital, especially from the primary markets. But they have got into these areas for God knows what reasons it is. So going forward, you all need to structure your authorized capital and how you raise your funds, keeping in mind these provisions. Now, what are these provisions? Now, a public company can go through an IPO. It can have private placement. It can issue right shares. Right shares would be existing shareholders, and it can also issue bonus shares. Now, bonus shares is not something which would matter to you all, but IPO is something where, in case, as and when you all add value to your business, there are many companies which are probably turnover is 500 crores, but in terms of valuation, it could be massive. So that is where you would need to have, your structure, your processes matter, because tomorrow if you were to approach a Yes Bank's investment division or, as to be the banker to the issue, as a company, you will be viewed by Yes Bank not as that small company, but as a company which is going public. So you will have you will have new partners that will be coming into your business. So you would probably end up holding 40% or 50% or even 60%. The rest of the chunk you would share it with, you would share your wealth creation capabilities with the public. So a public company can look at IPOs, can look at private placement. Now, private placement, if you look at Flipkart and all these stories which are there, I'm sure in the days to come, because you all are an untapped segment, in the days to come, you will have private equity investors wanting to come and fund your dreams, fund your way of doing business. That is my belief. So that is where these opportunities come. But these are very highly regulated provisions. There is another concept called private placements, where you offer your securities to few set of individuals who are not your shareholders. Now, unfortunately, the Ministry of Corporate Affairs should have left it to SEBI to decide on the regulations, but for some reason, they felt that they should regulate it. So there are huge restrictions which have been imposed on companies that wish to place securities on a private placement basis. For example, you can't give it to more than 200 people in a year. You can't do, it's on a quarterly basis, maybe 4 times in a quarter, so on and so forth. So it's a very highly restricted environment in which capital can be raised by all. As far as private companies are concerned, you can raise it through rights issue or private placement or a bonus. So it's again restricted. Once you offer your securities to the public, that is more than 200%, that's when you become a public limited company, and that's when the IPO and stock market comes into play. Since we're dealing with the concept of Companies Act, I don't want to even get into the listing agreement because the provisions are far more they're far more cumbersome, and very, very, very strict requirements are there. Yeah. No, the previous one, yeah. For example, private placement, as you see, you need the shareholders' approval. So today you're a closely held company, okay? But as you grow in business and when you need new partners to come in, and there are people who are ready to invest in, this could be one of the modes in which you can raise capital. Now the restrictions I talked about, the restrictions is limited to 200 people. I'm sure in your growth with an entity like Yes Bank behind you, you won't need to be worried about money. But should you look at investments from the private sector, from individuals and other entities, these are the restrictions that you need to bear in mind. Now, the concern is we've been trying to lobby with the government, the Ministry of Corporate Affairs, trying to say that, for unlisted entities, who are closely held, there should be the norm should be much more relaxed as compared to companies which are already public. So hopefully they will see better sense, because I think so capital is something that we lack, and I think so I'm sure with the right environment that is created under the Companies Act, you all can really grow exponentially. Next slide. As I said earlier, what are the options that are available for raising capital? You have rights issue, you have preferential allotment, and issue of debentures. Now the debt market is something which the government wants to promote. Equity has been, we've been witnessing a lot of seesaw that is happening. Just before the elections, we were at 20,000 levels. Now we're at 24,000 levels, and people talk about 30,000 levels. But still, the underlying sentiment is not of stability. So the bond market is something which you all could raise, and that is something which you all need to explore if you all intend to grow and take your company to the next level. The requirements are indeed stringent, because there's a requirement for creation of a debenture redemption reserve. Fortunately, the requirement has been exempted for NBFCs, banks, and housing finance companies. But as I said earlier, when I look at these provisions, I do not agree to the sentiment that achhe din aayenge, because unless the new government reviews these provisions, which are very, very stringent, because not all mid-sized companies who are in the gap of 50 to 100 or 200 crores can raise vital resources with these kind of restrictions. Ma'am, next slide. Except on deposits, I don't think so many of you all would have accepted deposits, but this provision is very critical, because you all would have investment in companies which are accepting deposits, and government is akin to believing that manufacturing companies and non-finance entities have no right to accept deposits. I know of many companies. My deposit portfolio is close to 55,000 crores HDFC. We have set very high standards in servicing of our depositors. But there are also many non-finance entities in India who have set very high standards, and they have serviced their depositors. The government has made norms very stringent for them. In case of small mid-cap companies who may have accepted deposits from their members and other persons, are required to refund the deposits within a period of time. There is no logic or rationale that has been provided by the government as to why these provisions are mandated for such companies, but that is something which many mid-sized companies who may have accepted deposits will have to grapple with, which will create a lot of problems for them financially. Now, there are certain transactions which companies would have entered into, and some of the deposits which have been exempted, some of the transactions which have been exempted as deposits have been listed here in the Companies Act. The other restriction is, now this is for companies which are a holding company structure. There are restrictions that are imposed on the quantum of loans that can be given to other entities, quantum of guarantees that can be given, and quantum of investments that can be made. Now, the restriction has been capped to 60% of the paid-up capital and reserves. Now, the requirement has been made stringent, as in the government felt that some entities would rechannel their funds by investing the surplus funds in subsidiary companies or diversifying. Therefore, the restrictions on investments have been made more stringent, which requires the special resolution of the shareholders. Now, this is something very important. Like, if you are going to grow as a company, the composition of the board is one of the biggest challenges, because you are, I think so, most of you all are family-based businesses, and you would have your family members or very close friend circle who would be on the as members of the board. Now, the requirement is certain companies, when they exceed a threshold limit, let's say 5 crores or 10 crores, there are requirements of setting up certain committees, there are requirement of appointing of key managerial personnel. Now, these individuals have to be professionals and they need to be brought from outside. So the challenge is that whether should you be focusing on business, whether should you be focusing on compliance, what kind of individuals can you trust, and where do you get these directors from? So I think so the threshold limit is something which the government should revisit, because you have a threshold limit of 5 crores and 10 crores, it is pittance. Today I know employees of Yes Bank and SDFC Limited and SDFC Bank who have stock options worth more than these figures. So that is something which the government must revisit in the interest of general business. So what are these requirements? Sorry, the previous slide. So as a public company, you need to have 3 directors. Private company, you need to have 2 directors. 1-person company, obviously 1 directors. Now, what is a 1-person company? As I said earlier, it is one individual who doubles up as the promoter member. He subscribes to the memorandum. He is also the director. So he is one person who manages everything. He takes all the responsibility. He takes all the liabilities. Okay, and all that he needs to do is, when he incorporates the company, he needs to identify one more person who will step into his shoes should anything happen to him. Now, for some reason, in an economy which was expected to grow at 6 or 8%, the government, in its wisdom, felt that there should be a cap on directorships. So what is going to happen is, the existing directors, existing individuals who are directors in companies, they have to revisit their directorship. So one of the sources for you to get individuals would be those individuals who would be directors in more than 20 companies. So you need to keep a watch on, if your business is going to grow at a furious pace, then I think so you need to keep a watch on who are those individuals who would have to exit as a director from the existing companies. Now, this is very restrictive, because when a business is growing or when the economy is in a downturn, you need people whom you can trust. And I think so the concept of restricting directors based on the number of directorships they are holding was not correct.